We'd like to welcome you to Trading the Trend. My name is James Boyd. Today is Thursday. We ask ourselves the question each week, what stocks or assets are on your balance sheet? So I want you to kind of think about investing, not just like trading, okay? Think about investing as like, what companies do you actually want to try to own? And by the way, it could be 1 share, 50 shares, 100 shares, whatever it is. What are you trying to actually put on your balance sheet to grow your assets and equity? Very important to kind of have that mentality that a lot of people don't really talk about, but I think is very important. If someone becomes wealthy, it's what happens on their balance sheet that controls their income. And if someone becomes poor, it's because what's happening on their balance sheet. So I want you to think to yourself, if you had to write down the assets that were in your account, what are they? And start tracking those. Now, just real quick as we get started, we have Connie Hill with us in the chat. And also want to make mention to us, if Dean with us, Josh, Prakesh, Aloha, Scott, back to you, and Sia and Trader Joe and many others. Now, just real quick, Connie and myself, we do post educational content on X. I do want to make mention of one interesting note that we need to really bring up that is happening tonight. And you're going to see that tonight, Thursday, June 25th, 7 to 8 p.m. Eastern. You're going to see that that is in the chat. I sent you a link. And these, Jim, Liz, Lizanne, Joe, Cooper, and Chris have different viewpoints given their kind of investing disciplines, if you will. They're going to be sharing the mid-year market outlook. That will be tonight. Now, as you click on the link, you're going to see that it's going to send you an email. That way you can click on that link at the time of the presentation tonight. Do not miss that. If you have something, call and cancel. Be there. Okay, I'm going to be watching as well. Now, just real quick, also as we get started here, want to make sure that as we get going, remember that we're going to talk about stocks and options. Lido Len wants to talk about stocks, and he wants to talk about Micron. We'll get there in just a sec. Len, be as patient as I am. I'm joking. Now, we'll talk about stocks. We'll also bring up options. Remember that options are carry a high level risk, not suitable for all investors. When we talk about the examples, the information here is provided for general informational purposes only. This webcast discusses technical analysis. There's other approaches like fundamental analysis, macro, intermarket that may assert some different views. Technical analysis is important. It's not everything, okay? And so that is usually a starting point. So welcome to your starting point. Now, our examples will be done in the Paper Money software application for educational purposes. Investing involves risk. And also, as we get started, I want to take a look at the markets. And JP mentioned there was kind of some unusual activity here today, and we'll talk about that, kind of some of the earnings reaction from Micron all the way to Apple and so on. Let's get started. Now, by the way, as we get going, just so you know, your comments, your questions are very important. When I look at whether a class was good or bad, I really look at one thing. How many comments were there? How many comments really kind of determines how many people were actively engaged. Some teachers don't like comments. I love them, okay? And it doesn't throw me off on what I want to talk about at all. Now, S&P 500, we've been talking about for days how it's top-heavy technology, okay? And we know that kind of with the movement or the lagging to some respect in the NASDAQ, that the S&P is lagged, okay? And we like to always think that the tech is going to lead. Usually does. But that doesn't mean always. The S&P 500 is lagging, which is top-heavy technology. But remember, if we look at the NASDAQ, okay, that's what the NASDAQ looks like. Now, if we kind of see what we want to see, right? If we're bullish, we see the tails on the bottom. If we're bearish, we see the red candles. Isn't it funny how it works? Okay. But still the point is the NASDAQ has still struggled in general over about the last, let's say, week or so. Now, when you pull up the semiconductors, the stocks, again, kind of depends on what you want to see. If you said I'm bullish, I like that tail, that bullish investor says. The bearish investor says, red candle right into resistance. Now, if we kind of said, is the stock stronger than the NASDAQ? Well, we could do a comparison chart, overlap them, a ratio chart, and you would actually say the SOX is stronger than the NASDAQ. but the NASDAQ has lagged. Now, when you pull up the SPX EW, and we've been talking about this day over day, the equal weighted index here today hit a brand new high. I get it. We would have liked it when it was up higher in the day. I understand. Still made a brand new high. You have to have a high to try to make actually a higher low. You made the high. I know what you're thinking. I want more. Join the group. Okay. Now, the percentage of S&P 500 companies trading above their 50-period moving average, that also went too high. And remember, we've been watching this. When the market actually fell, we did not really see this fall apart. It actually kind of showed a higher low, okay? The percentage of stocks above their 200-period moving average, that also hit a high here today. So it's not all bearish, okay? But that NASDAQ, though, there has been some profit taking in that area. Now, why is that? Well, you tend to profit take in some of those areas that you think are maybe extended, or you just have big profits in general, and or you have profits, price action where they start to break below support. And there has been some movement in those NASDAQ names. The VIX got him in a range, which is take that. And the TNX CGI, you're going to kind of see that is falling down again. Now, remember, falling rates is usually inflationary for some stocks. Now, we're not talking about crashing on the rates, but seeing the rate drop on the 10-year, it's usually not bearish, okay? It could help push up some key areas. Now, if I were to ask you, what sectors are you looking at here today? Which ones are you looking at? Speak now, forever hold your peace. Well, so if we take a look and said sectors, why does it matter? Well, we want to kind of know where those actually entries coming from. Now, before I get your answers, type in the chat. Let me show you just real quick what the Dow did. The Dow actually did go up and make an intraday high, was up 400 or 500 points, did not hold there so far. But if we close here, day over day higher. Okay, would have liked it earlier, sure. Russell, small caps, that also made an intraday high, okay? Now, here's the thing that we need to understand with it as an investor. Not every day is going to be some banner day. That's not how trends work, okay? Now, if we said, let's say, so I asked you, what are you looking at? Scott actually says chips, okay? Now, by the way, let's pull these up and say, why is Scott pulling up the chips? Well, let's go just real quick to the S&P 500, and let's look in the information technology. Now, there's some movement in here. Micron, the revenue was up 400%. Mama mia, for crying out loud. You don't see that all the time, okay? Well, you say this all the time. Money attracts money. Micron, AMAT, LRCX, CLAC, QComms even bounced back, SanDisk, WDC, Seabiscuit, or Seagate Technology, even Pan Am's in there as well. Keep an eye on Pan Am, and you're going to see that GLW, that Corning firing back to the upside. We talked about that the last 2 days. Now, we're going to talk about some of the areas that haven't been that hot, and one of the areas that has not been that hot, which we'll get to, is really Apple. So it makes sense why you're talking about that. That was a 16% move in Micron. It was a big one, okay? Don't always get those type of moves, especially when they were already over 1,000 to begin with. Now, if you look at, let's say, the industrials, let's bring this up now, okay? A couple you said industrials. We got brand new high industrials. When you look at the healthcare, okay? Healthcare, IXV, that was a little rotation, okay? Kind of a little yank back to where the old breakout was and getting a little push. Now, let me take a step back for just a moment. When you take a look at industrials for just a sec, any stocks that you're watching. Now, this is why we do this, okay? We're not looking at industrials just for nothing. Now, option number one is, what's option number one? Option number one is the investor might say, I'm just going to buy the sector and or industry group. That's option one. You're buying the group, considering it. Option number two, what individual stocks do you think in there that may be causing the push? Now, if I said industrials, go back to MarketWatch, let's pull up industrials, and here's the industrial list. And notice we're not making a list. Here are the stocks. They're in the S&P 500. If you said this is too many for me, I can't handle that many, go to the S&P 100, please. Click on industrials, and there's a smaller list. It's fine. Start with this smaller list, maybe 10 or so stocks. If it's less than 2 handfuls, we should be able to handle that. And the big one in the middle is kitty cat. Now, we'll talk about that in just a sec. But also, do not forget the big green machine. And it's John Deere. Okay. God, so many things to get to. Now, a couple of you also made mention of the healthcare. Let's do the same thing. The healthcare, if we went back to healthcare, which stocks? James, you got a lot of questions today. You're right. I do have a lot of questions today. I want to make sure you have the answers. Now, if we take a look at the market watch, let's go back to it, visualize, give me healthcare. Let's start with the smaller list. Now, are there any stocks in the healthcare that are getting a little push? Now, Dean also makes mention of one I'm glad that I didn't make mention of, is CMI, but I wrote it down the list. So Dean will swing back to that. Now, if you look at, let's say, healthcare, remember one of the horses that started this move in healthcare was UNH. By the way, it's actually trying to get a bounce. AbbVie is also pushing as well, and Big Johnson, which we have a long call on, will hit in just a second as well. Now, the other ones that I think we kind of need to make mention of based upon what your comments were, some of you said financials. We saw JP Morgan hit a brand new high here today, Visa, American Express, among others. Those were actually hitting a high, include Travelers as well. Okay, now, I think we also need to kind of make mention of the transports, okay, trying to get a little bounce. Some of, again, some people say, man, all you do is talk about airlines. Well, our job is to be objective and just seeing where there's trends. And if the trends continue to be in certain areas, then our job is to be objective and talk about those areas that are upward trending. All right. Airlines actually hit a brand new high short term on United Airlines, on Delta, Love, which Scott did not like, not Scott from Aloha, okay, the other Scott. And you're going to see that did actually go up a little bit more. But what about Alaska? It's up at 2.6%. And that Ryanair, okay, you're going to see us getting a little push here. So the airline's still in the mix. Okay, now let's talk about some of these stocks, okay? Now, the comment from James is kind of really on no bueno, translation please, on healthcare. Let's start here for just a second. Now, I posted on my X page, really, when you look at the cost of healthcare over the last 20 years, what employees pay, what employers pay in terms of premiums, and then you look at the out of the pocket, and then you actually add it all up what that total cost is, someone's making the money somewhere, okay? If you looked at most families, they're probably paying between the employer, employee, out-of-pocket costs, maybe $20,000 to $25,000 a year. Maybe the biggest line item that they actually have on their expenses is in healthcare. And they might not even be going to anything. Now, let's kind of talk about this. Where's this money going? Now, remember, what was option number one? Option number one is the investor might say, well, maybe could I buy the group? Option number two is maybe some individual stocks in there. Let's go back to UNH just real quick. Maybe if we said healthcare, some might kind of think of this as maybe an area where some investors might say, I'm well aware of it, okay? Now, if we looked at the trend, this class, again, trading the trend, okay? Now, you got to remember something. If the investor just sits in cash, then about every year that goes by, that cash should typically go down by 2% a year. Why? That I word, that bad I word, inflation. The inflation eating away at that purchasing power of the US dollar. Now, if we did that for 4 or 5 years, well, that would be almost 8 to 10% of just eating away at the purchasing power, okay? So the investor that understands that is saying, I'm trying to put my capital to work to something that could appreciate more than what the inflation is. Now, James, why do you bring that up? I have a friend that sat in cash for the last 5 years. Saw him 2 weeks ago at my son's reception. Said he was still sitting in cash. Ooh. Okay, now, if we look at this, I'm going to go back to the trade tab. Let's do our first example. Let's back this chart off for just a second. So if we looked at the trend just real quick, we're going to kind of see that we're at that little bounce spot. Now, let's show 2 ways we can smooth the candles out to kind of see the higher lows. First, Let's go to Hakanashi, okay? Now, if you look at this Hakanashi candlesticks, it really kind of helps us see the trend easier, okay? It smooths it out. Second, we can see the higher lows. The higher lows we can really see by the red and green candles. Do you see them? Do you see this red and green candle? Do you see the red and green candle? And remember, if these ovals are getting higher, say out loud, higher lows. If we have higher lows, and prior to that higher low, there was a high, that is an uptrend. Okay? Now, if we take a look at this, we've gone from red to actually turning green. Now, here's the thing that we got to get out of our mind is how do we know it's going to go up? We don't know that. Okay? Even when we got married to our spouse, how do we know that 6 months later they weren't going to quit? You hire someone, how do you know they're even going to show up after a week? We don't know. If you don't stop yourself from being that emotionally fragile, you're going to never invest in almost anything. Okay, and inflation is going to eat the purchasing power of the cash. Okay, we don't know the future. Now, with that, that's where the investor says, I need to understand what the potential risk is. Now, we drop this chart back to the 3-year weekly. Kind of the path of least resistance, as Lido Len would actually like to say, is maybe looking at if it could go up, where might it try to go up to? Well, sometimes we got to go look at that 3-year weekly chart. That 3-year weekly chart is probably right around, let's say, 472. Now, remember, let's kind of think about this. Where's this money flowing to? All this money of employees paying premiums, employers paying premiums, out-of-pocket expenses. Where's it all going? Okay. Now, is United Healthcare the only one? No, we can look at Cardinal Health as well, among others. Now, if I pull up, let's go back to this. We're going to do this in the paid money account so we can follow along. Let's go to the trade tab. Margin account at 52,000. This is never a bad thing that if the account goes up higher and higher, the positions become higher and higher. Oh, how nice that would be if it could happen. Don't look at GLW up $19. Okay. We're going to right click and go to actually buy custom and going to go with OCO bracket. Now, wait. That's GLW. Got to type in UNH. Right click on the ask price. There it is. There. With OCO bracket. Now, is this a stock or an option position? Well, we're doing a stock position. How do we know? Stock, all right there. No expirations and strikes. Now, going to go actually right here to the I call it the pool balls. We click on that, it goes to percent. It goes to dollar. We're going to type in 5,200, okay? Now, when we type in 5,200, that represents no more than 10% of the capital of the portfolio. Right above that dollar sign we actually see right there, the little icon, it's going to tell us 12 shares. Now, we're going to type in that number of 472, dated GTC. Now, the stop underneath, let's go back to where those higher lows were. Why is that important? Because that's where we're going to set the stop, okay? Now, if we bring up our little sheet, what's the current price? 414.71. Where do you see that? Right there, okay? Now, number 2. Now, I remember someone said to me one time, and I'm just repeating what they said, James, when I see a company that's jacking up the prices, whatever company that might be, if they are, I usually use the strategy called get even. Now, he chuckled. Now, we're not sure if the company raises prices, if it's always going to have the stock go up. Noted. Just look at Apple today, as we'll hit in just a sec. But if you look at this support underneath, we're going to use this little plateau that we actually just got a couple days ago, right around the 402.61. Now, stop, remember, is a market order. What does that mean? Sell if it goes to that price or less. We're using 2% below support. Well, that's going to be at 394.56. When we look at the dollar amount of risk, if we go from there to there, it's $20. The $20 sounds like a lot until you understand that the stock is 400, and on a percentage amount, it's 4%. If we're only risking 4 or 5%, that's probably about as low as you can get. So in other words, if you're going to take risk, the investor might say, I don't want to take that risk. If I'm wrong, I'm wrong. Okay. Now, I'm going to come back. And we're going to set that stop 394.56. Here it is, 394.56, dated GTC. All right, there. Trade number one, UNH. Okay. Now, what account? Margin account. Remember how the stop works. If it goes at that price or less, sell the shares. Now, this is very important here. Okay. A lot of times people think, well, I'm sitting in cash, I'm safe. You're not safe. If the inflation is actually 3%, 4%, it is chewing away at the buying power. Look at car costs, insurance costs, or protection. Look at housing costs. Look at college kids' educations, weddings, you name it. How safe is it? Now, cash is a position. There's reasons for that, but you need to understand this is why there's been an uptrend in the stock market, is because people are trying to, investors are trying to outrun some of that inflation. Type in the chat if you get that. So people say, I don't understand why it's going up. Because if we went in and said, look, we're going to buy a fixed income CD, whatever it is, that return, if it's not bigger than what the inflation is, which by the way is stated from the CPI, the PPI, from who? From who? Okay. That number that's stated might not be the real number that maybe you might think that it really is. Oh my gosh, that's a rabbit hole we could go down. So this is why some investors are saying, nah, I'm going to look for some stocks that might have that room. But don't forget, when I say stocks, some investors might buy the sector. Some investors might buy the industry group. And some of those stock sectors and industry groups sometimes can have stock-like type movement. Don't forget that. Now, send the order. Now, we already talked about the stop twice. There it is. Send it. Now, I want to go back to something just real quick. A previous trade that we did was on J&J. Can anyone actually tell me, okay? Oh, man. I love it. You know what? A lot of times when I take a day off, I usually just teach anyway because I just love being here. It's just like the comments. It just stokes the fire. Okay, now here it is. Johnson & Johnson right here. What is this position right here? Is this a long call vertical? Is it a short put? Is it a stock position? What is it? Well, that is actually a long call, okay? It's a single option, okay? Single meaning it's just you didn't buy something and sell something or vice versa. You just bought the call. Can anyone explain to me why you would buy the call itself? Well, it's kind of like putting something under contract, okay? Now, if you put something under contract, you're trying to have a right to buy the shares at a set price. Okay, so the right to buy the shares at a set price, that right does not last forever. It has a certain amount of time to it, and that certain amount of time is 22 days. Now, if I went out and bought a house today with my wife, and I put that house under contract, I hope that in the next 30, 69 days, that house goes up in value. So there's more theoretical intrinsic value or equity. The same thing actually goes for the stock position. So if we actually look at the position and say, when was that position entered? June 9th. Let's go look at the chart and kind of see where that was on the stock price. June 9th, J&J. Pull it up. Show me what we have. June 9th was about right there. So it was on this day. So we've got to ask ourselves the question, okay? Somewhere in that green candle, the long call was purchased. For the next 2 or 3 days, we thought the investor they knew the future until the stock pulled back and the call decreased in value. Then the price actually shot back to the upside, and now the investor feels incredibly sharp or bright. How many of you have ever felt like that? Where like, my gosh, if every trade could be like this, it'd be amazing. Now, the long call, I want to kind of show you something just really quick, okay? That long call was purchased for $575. That long call, in about 2 weeks of time, has now morphed into $940, okay? So this, when we talk about a percentage gain, $9.20 over $575, it is now morphed into 60% on the investment. Now, I want to show you something just really quick, okay? There's been some questions on this. So we got two options here. Option number one, if the investor says, look, I just want to trade the long call by itself. I really don't want to own the shares. Well, then they're just playing the long call out itself. Could they set a target on the long call? Could they actually just sell the long call by itself? We'll show that. Or could you just exercise the call? Now, does anybody know what I mean by exercise the call? What does that mean? What does that mean? Well, if we exercise the long call, the option contract, that long call could actually turn into what? Shares. How many shares? And the answer is 100 shares. Now, we've got to ask ourselves the question, why might the investor do that? Well, number one is they might be running out of time. The long call doesn't last forever. Number two, maybe they actually want to try to get a higher delta. Number three, maybe they want the dividend, okay, etc. Those are three primary reasons. Let's first show how would the investor just sell the call if they said, hey, I think we're at a short-term top. We're going to right-click on that line, create the closing order, and sell that. Now, if we sell it, double-check the liquidity, we could try to sell the call now. Irregardless, we're not 22 days to even though we have 22 days to expiration. That was a fallacy, I thought. I thought if I bought the call, I got to wait all the way to expiration. No. The stock trades, check liquidity, but so is the option. Check liquidity. So we could try to buy and sell it, just like a stock. Second, if I said, you know what, I really want to own the shares. I actually think the investor says that it could break out, and I want to have a higher delta. So you got to remember something. When someone has a long call, that delta is not 100. Has a delta of 62. What does that let us know? It's in the money, probably one or two strikes, probably two. And the investor says, look, I also, fourth reason why I don't want to be in that long call maybe, is as I get closer and closer to expiration, the time decay goes up higher and higher, and I don't want to have that decay. So we already talked about, what if I just want to sell it? Showed you that. Wonder if I want to exercise this. Exercise means what? Yes, buy those 100 shares of stock. Right click, exercise. Now, if you exercise, we're not talking about exercise, go to the gym, get on the treadmill. We're talking about exercise the right to buy the shares. How many? 100 shares at the strike price. Now, is that realistic in an account of this size? Say no. Because if it was a $240 stock and we bought 100 shares, that's $24,000. $24,000 is 50% of the account balance. So no, we're not going to exercise. But if we had a bigger dollar account and it wouldn't overrun the rule set of how much we can invest, there it is. You can exercise, try to, could, prior to expiration, not just at expiration. Okay, just wanted to go over that. Now, when we talk about the J&J, just real quick on the J&J, where do we think it might try to go to? Well, the prior high is actually right at 248. Could there have been some short-term profit takers? I'm not looking at anyone, okay? Could there have been some profit takers from the state of Illinois that maybe said sell into the resistance? Yes. Now, just because those short-term profit takers sell, does that mean the stock is going to collapse? Maybe not. But you got to remember is that everyone kind of has a different exit point, okay? Some short-term traders, they probably targeted 248. If someone actually thinks the healthcare area could actually go up, well, they're probably holding some of those bigger names that might try to get the move, okay? Now, if we go back and take a look at this, let's also go back to I just want to say something real quick on Caterpillar, okay? Caterpillar has, if we look at this, what is the position? And it's going to be a quick discussion on Caterpillar. Caterpillar was 10 shares of stock. Now, when you look at this, you're probably thinking, well, oh, yeah, that trade was probably done last year. Well, hold on. Okay, make sure you're paying attention here. If we click on that, that trade was actually done 9 days ago. I have said before, and I'll say it again. Buy 10 shares doesn't mean you can't be up a couple hundred or down a couple hundred. You got to remember on these bigger dollar stock prices, on a nominal basis, well, dollar amount, they're moving more, okay? So what I'm going to do is also, let's go back to just real quick the other example. Let's pull up two of them. We talked about the big. Now, by the way, when we pull up Caterpillar, is there like a target on that? We don't have a target on that. The one thing that we might look at is Fibonacci for just a second. Okay. Now I want to go back to Caterpillar. And what I want to do on Caterpillar is I just want to kind of look and see where do we see any areas of resistance using Fibonacci. Now, I'm just going to kind of measure, okay, from this low to high with the bodies of the candles. Now, if you look at this, we went to the 161, overshot the 200, overshot the 261, and that 423, which is not on there, which I'll put it on there, is where? Well, that 423 is going to be right at 1146. So if we're talking about what might be the next potential target, answer 1146. It sounds on a dollar-wise huge, but when you look at a percentage basis, it's like 8%. Okay? So it's not dollar-wise it look huge. It's just 8%. Okay. Now so that's the question I had on that. Now, if we pull up Deere was the one that we actually showed yesterday. Let's double check that paid money count on the Deere. Now, has anybody been watching Deere? Deere was the example of buying shares of stock, and the gains on it really came from in the last day. Now, a lot of times people will think sometimes when you look at trend, oh yeah, you missed the entry. What the truth about trend is there's not usually one entry. There's multiple entries. What do you mean by that? I'll be happy to tell you. One of the entries that we actually saw just recently was close above the high to low day there. That's an entry, a setup. The second entry was right there. And the third entry was, again, right here. Now, we might say language like, oh, yeah, you're too late, okay? And again, we're going to push back on that because when we actually go back and take a look at this, I'm going to kind of put the labels on, and we're going to look at the number of days where the moving averages have really been green. Now, the color coding here, when we look at G, stands for green. What green? The moving average is green. The 10-period moving average green. Day one, it was green. Okay, 2, 3, 4, 5, 6, 7. Now, here's the truth. If the investor wants to try to get in at maybe a closer to support, they're usually trying to get in on that day 1 through 3. If they're probably getting on day 4 through 6 or 7, you might be a little bit more elevated off support. Let's double check the percentages. Now, I'm going to tell you right now, a lot of people say, yeah, we missed it. Look, you can't just eyeball it. You can eyeball it with the moving average envelopes, but the bottom line is put the percentages on it. I'm going to show you different ways, and you could take whatever one you like. I'm going to put 621.52, which is the current price. Support, if we said support is, let's say we thought it was the 20-period moving average at 598.07, and we're looking to see what percent. And remember, if we take a look at this, it's 5.7%. That's actually really slightly higher, but that's because the stock went up 20 points here today. Now, the other way we could view that is it, quote, too high? Is go back to those envelopes. Now, one visual way to kind of see about that 5% is what I just said to you, which is that light blue line is your 10-period moving average. Yellow line is 3% above, and the red line is 5% above what? The 10-period moving average. Now, we know something collectively. Just because today's a green candle doesn't mean the stock's never going to go down. What might the investor do? Well, the investor might say, you know what? I'm going to kind of put an order giving back maybe about a quarter of today's movement there. Some other investors actually might say, James, I'm going to set my order maybe right at half of the green candle. Too many of us, myself included, we're too short-term sighted. We're too impatient. Okay? We're like, yeah, but I want something right now. Well, sometimes these stocks fluctuate, and you get this intraday fluctuation sometimes, or the morning where it goes down, where the price falls down right to the midsection of the previous day, sometimes gets a bounce, and sometimes being an investor takes patience. Okay? Now, type in the chat if you're also impatient. Okay? Now, what I'm going to do is I'm going to right click right the first line. What I'm now going to do is I'm going to bring up this order, right click. We're going to go down to buy custom. And now I'm going to go to with OCO bracket. Now remember, this is a buy limit order. This is saying, look, buy in if we get to this price or less. This price or less was 617.23. Okay? 617.23, limit dated GTC. So this is good till cancel. This is saying buy it if it gets to that price or less. Now the target will come to in just a sec. The stop underneath, if I were to ask you a question, what has been acting like a support area? What would you say? Well, we kind of had some touches here just recently of that stock holding that 10-period moving average. The 10-period exponential moving average is probably the most interesting moving average out there because it tells us about the momentum, but it also tells us, number one, it tells us about price momentum. The second is if you have price momentum, price above that, it also probably tells us, second, where the support level is for those momentum traders. Now, where is that? 593, okay, 19. 593, 19, less 2%, and it's going to be here, 581.32. And type that in. So 581.32. Dated GTC, dated GTC. Now, when we go back to the target here, where's the potential target? Now, if I back this chart off for just a second and said, where's that target? Let's take the bubbles off for just a second. I'll share this. So how do you take it off? If we go back to the little test tube there, I'm going to click on that little gear, the settings gear, and just go show bubbles. No, don't show bubbles. Okay. Now there, and now they're off. That prior high is going to be right in the vicinity of 650, 658 or so. Okay. Maybe a little higher there. Now, if you said, James, I want that chart that you're actually talking about right there, I'm going to give it to you in two forms. This link I'm sending to you is this chart. If you said, I was kind of thinking it'd be really nice if you could actually send me the whole package of those charts that we talk about every time we have a session, that's what the second link is. Now, if you're watching this on recording, look in the description of this video. That way you can grab it. You're welcome. Boy, nice little tool set. Okay. Now, here's the deal. We need to make sure that's going to be the right number of shares. That is target stop. Sell if it goes to that price or less. Now, any questions? Now, I'm just going to kind of see, type in if you have any questions. I'm going to kind of make a comment just real quick on Apple. Apple raised their prices on some of their memory chips or memory chips of, let's say, the MacBook. I think it's called the Neo, Air, iPads, etc., MacBooks. Stock actually down 15, down 5% here today. Now, I'm not sure if you've ever bought an Apple product. I'm not sure if anyone buys any Apple products thinking they're going to be the cheapest. But the price of the product might influence maybe the sales of the product. That's the idea. Now, sometimes short-term investors can be wrong. You got to remember something. If someone buys a product like Apple and the longevity of the product is longer, and at the end of it, they might be able to sell it for a higher amount, maybe that $100 or $200 might not be as impactful. So over this next quarter, it's going to be very interesting to kind of see is what were the sales and were those buyers willing to buy even though the product was 100 or 200 more? I mean, what's another 100 or 200 more if you're already spending 1,000, 2,000, or 3,000? I don't know. The point I want to make here is that some investors sometimes they can be wrong. Okay. The initial reaction is shorter term investors get out, but you also got to remember something is here is that sometimes when these prices drop And the earnings, if those earnings stay the same, the falling of the price might make it even look more attractive from a fundamental basis. But the second thing is the stock has fallen right back down to support where this all breakout happened. Now, it doesn't have to be that someone says, I'm going to get in today. They might say, look, I want to see the dust settle for 2 or 3 days. Understood. But you got to understand from the price perspective where that volatility goes. Okay? That if that actually has caused the volatility to spike, they might say, hey, look, in the next 1, 2, 3 days, the investor might look for an entry, counting on nobody probably buys Apple products for because they're cheap. They probably actually say, oh, I'll buy a Samsung product, Google Pixel, or whatever it was, flip phone or whatever, if they were really looking for a lower price product. Okay? I think that's, just ask someone, do you buy Apple because it's a cheap product, a cheaper product? Okay? Maybe not. So just keep an eye on this, because this kind of took a reaction here today, fell down to support. Keep an eye on the fundamentals here. Look and see if we can't actually maybe try to get bounced. Also keep an eye on where that 30-period moving average is. On the 30-week, we're sitting right at it. On the day moving average, we've fallen below it, and we're sitting right there on the line we talked about on the previous chart. Now, I'm out of my time here. We got the class coming up on short verticals next. I want to thank you so much for your comments and your participation. Also, do not forget about the event tonight. That, again, is going to be at 7 to 8 p.m. Eastern. Let me actually put that in the chat. Thanks to Connie Hill for answering those questions in chat as well. And again, Kevin and I will be back on tomorrow morning at 9:30 a.m. Eastern for a recorded only session on ETFs. Join us live. Now, remember, with what we talked about here today, it was done for educational purposes only. Remember that all investing involves risk. That's what the investor is trying to manage. And also understand this has been the class on trading the trend, a very important class to try to actually find those trends, grow assets, and actually try to outrun potential inflation, which has been kind of a headline over the last couple of years. So that's why the investors actually look at stocks, among other things. With that said, stay tuned for our next webcast coming up next. Take care. Bye-bye.